Dear trading friends, today we have a very exciting topic. I've mentioned it repeatedly in my recent videos, but today I'm going to show you my strategy, which I will use from now on to make the most of my held cryptocurrencies, some of which I didn't sell at the top, by using them optimally during falling prices to increase them, and to do so as conservatively and risk-free as possible. These are all completely normal exchange trading bots. Of course, I'll also show you this live on screen, monitoring how I proceed and what my strategy is, because many of you out there probably have exactly the same problem, that you didn't sell your cryptos at the top, or maybe only sold a part of them. This naturally means that the lower the prices fall, the less willing we are to sell them at these low prices. And for me, I don't just want to let them sit there, but rather use them optimally to increase them. The good thing is the coins that I increase now, even as prices are falling, will be worth more later on. But for that, you have to be very bullish on that particular cryptocurrency in the long term. This means that with various altcoins, as I'll show you later, you have to apply this very carefully. I mainly do this with Bitcoin and Ethereum. Except if we later see really low prices with Solana, XLP, or other altcoins, then I would also include the coins I currently hold in the same strategy. It's important, and I'll write this down here as well. For me, this is a risk-off strategy. Less is more, because the deeper the prices fall, the more often I will open this strategy with this type of trading bot. Of course, I'll explain in detail how I go through this process. Today, I'll demonstrate it with Bitcoin and Ethereum. We'll also go through a few altcoins so I can point out the dangers that really lurk with altcoins. And I'll also show you my risk management. I'm a very conservative trader and I want to avoid losses as much as possible, and that's exactly the case with this strategy as well. Accordingly, I'll also show you what my risk management looks like. Very briefly, a risk disclaimer. This is of course not recommended for imitation. This is not investment advice. It's also the case that if you're inexperienced or use this incorrectly with too much leverage, or if you apply it to the wrong altcoins, you could of course suffer a total loss. And I know that a lot of people out there don't really like to take a conservative approach. I do, but today I'm simply going to show you what my strategy looks like and how I protect myself in case prices really drop dramatically. And I myself only use a portion of the coins I still hold for this, the ones I haven't sold yet. I'm not going all in here, but instead I'm really only using a small percentage, maybe 20%, at most 30% of the coins I currently still hold. But now let's move on to the chart so I can explain to you what my approach looks like. I'm now looking at the Bitcoin weekly chart, and unfortunately, we don't currently know. Will it keep going down, and will we really see lower prices? Will we see a bear market? If that's the case, I would gradually apply my strategy here with this trading bot. It's a really simple thing, and I'll show you that in a moment as well. But if we start to rise now, of course I still have my held coins, which I can sell again at the peaks. And accordingly, I have, for example, zones for myself, which I'll show you as well, such as these order blocks in an area around 75,000. We also have further down in the area of about 60 to 50,000, a very strong volume, but if we keep falling, I always have new lower entry prices where I apply this strategy. In this case, there are 1, 2, 3, 4 opportunities where I enter, but with each strategy, I make sure to fully protect myself all the way down to a possible bear market bottom. Additionally, of course, I always use my Fibonacci strategy as well. We have the bear market low, we had the all-time high here, and accordingly I also have target levels here where I will reopen positions, for example at 70,000, 57,000, 38,000 US dollars, which is of course very interesting. We can see here that all of these are located at an order block, and for those who don't know yet, you can find it on my channel as well, where I explain exactly how my strategy works with the Fibonacci analysis, which is very, very reliable. And that would also be a possibility. Which strategy am I talking about? About a coin margin long grid trading bot? Because no matter what happens, if I really hedge myself properly and use low leverage, even if I enter up here or here and the price drops further, I'm holding my coins anyway. And instead of just holding them without using them to grow, I will gradually apply this strategy here. You'll also get current examples with active grid trading bots in US Tether, where I show you the advantages of this approach when you look at it long term. Where can you do this? This works on the PIONEX exchange. As far as I know, it's currently the only exchange where you can use coin margin and actually earn coins in return. That means I use Bitcoin and get Bitcoin back. I use Ethereum and I get Ethereum back. And if you're not on PIONEX yet, I'd of course appreciate it if you use my link in the video description. Just for signing up, you get a 50 US Tether grid trading bot bonus, and depending on how much you deposit, you also have the chance to use up to 1,000 US Tether as a grid trading bonus. And you don't even have to use your own money, you can just use these vouchers. If you make a profit, you get to keep it. If there's a loss, PIONEX will cover it. But now, let's continue with the grid trading bots. For those who aren't familiar with grid trading bots, I'll give a very brief explanation. If you already know about them, you can skip this part and move on to the next section. What exactly are grid trading bots? I'll use Ethereum as an example now, and let's say I want to trade automatically within a price range from 1,000 to 4,000 US dollars. I have the option to set up a grid. Now it says 350. I can say here, this is just a quick walkthrough. I can say I'll put in $1,000, and then I have the option. In this case, it's a long grid trading bot that each of these individual lines, which I'll zoom in on again, each of these lines you see here is used to buy at the green lines. We can zoom in further here and to sell at each of the lines above them. And here I'll zoom in again so you can understand it more precisely. I'll use my pointer here and explain it to you very briefly. This means that every time a green line is triggered here, a long position is opened. Further down, another long position is opened, and even further down, yet another long position. Here too, with this last wick, we opened a long position and it is sold above that level. And this position that we set above here is sold again here. So overall, just so you understand again, each line is connected to the line above or below it. If a lower line is triggered, the next higher one is used to sell again here. But what does it look like if, for example, it goes a bit further, like in this area? That means we're long here, long here, long here, and long here. And only when the price recovers here are all these longs closed again, and profits are taken off the table. To visualize this now and to show you the big advantage, I want to show you a long-term bot now in USDT, so not a coin margin bot. We'll get to that in another account of mine where I already have the coin margin bot open. What is the advantage? If I now say, as a small example, I enter Bitcoin here or Ethereum, it doesn't matter. And the price keeps falling. It can keep working these grids down here the whole time as well. Everything I've just shown you. And the more sideways phases there are, the more often longs are opened and closed again. If we have a big pump, then all the previous longs are also closed again, and that's how it works the whole time. And the lines above, which we see here in red, are used to generate sales. That's how it is in US Tether. But later, with my strategy that I'll show you, we actually generate the coins themselves, no matter whether the price goes down or up. The cryptocurrency itself is generated again and again. Let's take this example. We've entered at this high point, and now I'm going into this example, Ethereum US Tether. This grid trading bot, for example, has already been running for 48 days, and here we can see the grid profit. It has generated 12.85% in grid profit. But if I now say I don't have any US Tether, but I'm doing all of this with an Ethereum grid trading bot, and for example, I'm not willing to sell Ethereum for less than 4,000 US dollars, then in this case, I've already generated 12.85% that no one can take away from me. And if instead of US Tether, it's Ethereum that has been generated and Ethereum then rises again to 4,000 or 4,500 US dollars, then the generated Ethereum will of course also become even more valuable. And that's the big advantage of coin margin. What happens if you enter at too high a price? Let's take this example here. My entry price was 3,729 US dollars. However, after the grid trading bot has already completed 508 grids, that is, opened and closed them, I can now see, and you can see it here too, if I go to parameters and remember the price, my entry price was 3,729. And if I now click on stop loss, you can see that my current break-even price is only 3,330. This means that I now have an entry point that's about 400 US dollars lower than it actually was at the start. And that's because even though the bot is overall at a loss, it's constantly working and through the grid profits keeps lowering its average entry price. This means I'll be back in profit sooner. And the second advantage is the more grid profit you generate here, and as long as you don't withdraw it, which you could do, the more the set liquidation price drops because we're always putting a bit of profit aside that's inside the bot. All right, that's enough explanation for now. Let's move on and take a look at all of this with the coin margin grid trading bot, and I'll show you my approach with it. Here you can see my first coin margin Ethereum bot, where I've now put in 1 Ethereum. I said risk off, less is more, because if the price keeps falling, I'll open new bots further down. I've hedged myself with this grid trading bot here. This trading range is supposed to be from $1,450 to $4,500. But what happens if we drop below that, or if my liquidation price here is reached? Of course, I would add margin before that happens. Now I have two options. Either I use the Ethereum I already hold and put it in to lower my liquidation price, or, and this is the big advantage, I don't have to buy it now just to add it later, for example, at a price of 2,855. No, if I see that prices drop to 1,500 or 1,600 US dollars, then in the worst case I could buy Ethereum very cheaply and then say, okay, I'll add 1 Ethereum here. And then it adjusts my liquidation price, the current one you see, from 1,394 to 1,023 US dollars. If we continue to go lower, I can buy another Ethereum even more cheaply, which I would plan to do in a bear market anyway, and say, okay, I'll add another Ethereum, which I bought at an even better price, and my liquidation price drops further. And depending on how far I'm actually willing to keep buying Ethereum, I can of course say in the worst case, I'll add 4 or 5 Ethereum here, and my liquidation price keeps dropping further and further. Of course, you also have to keep in mind that in an absolute worst case scenario, if the price keeps dropping, you could still get liquidated. But accordingly, I'm willing to buy enough Ethereum, for example, below $1,000 and add it in as well. But this is just the very first trading bot that I've shown here. What I can also show you is that this trading bot has been running for 3 days and 20 hours. My entry price was 3,076 US Tether. And if I now go to parameters and ask, what is my current break-even price? Because it has already generated a bit of Ethereum, I click here on stop loss and you can see my current break-even price is at 3,028 US Tether. That means my average starting price, where it all began or where overall I definitely generate more again with the trend profit, is now $40 below the price where I started. And we mustn't forget the trend P&L either. This is currently, of course, the area where the Ethereum price is at this point in time, and it has dropped further down from my starting price here. And that's how the trend P&L is created. The good thing is, even if the trend P&L rises later and we sell above that, I still generate Ethereum here regardless. And you can see that here as well, trend P&L in Ethereum, but also grid profit in Ethereum. And accordingly, in the long term, this is of course something very reasonable. How do I set this up for my next bots? That's what I want to show you now. For that, I'm now on the Ethereum weekly chart. Personally, I use liquidation levels, but of course also technical analysis, and it's important to master that as well. But I know for myself, for example, that I now have new zones where I will enter again. That's in this area around 2,000 US dollars, a little above that. That's an area where I will open a new bot. And if we go further down, I know I'll open another bot here as well. But my price range, the lower price range that I include everywhere here, will keep dropping, namely down to about 700 or 800 US dollars and upwards to around 4,500 US dollars, because then there might be a point where I say I'll sell or close the bot, which is also not a problem. And then I use my generated Ethereum to sell it higher up. And accordingly, I do the same thing with a second bot if we continue to drop, so that I do exactly the same. The very first one now has a liquidation price of 1,500 US dollars. That's roughly this low that we see here, which is still fine for me because if I say we go lower, then I'll just use new bots here anyway. But that's my current strategy. We see something similar with Bitcoin. If we look at Bitcoin, you'll also get the info on how I set it up. I'm now bringing in the US Tether chart just so you can see roughly how I proceed. Because here we have the possibility, for example, if I now include Big Beluga Smart Money Concept, we have an order block here. Yes, around 70,000 to 75,000 US dollars. The next one is at about 50,000 US dollars. Another at 38 and another at 25. And you have to be aware, of course, when you set this up. For example, if you start one at 75,000 US dollars and we enter a bear market, then the bot will naturally be in the red for a very long time. But while this one here, and this is going to be a very interesting zone, probably consolidates for a very long time as well, it collects an incredible number of grid profits, which in turn pulls a possible entry that started here. If I say I'm extending this down to here, further and further down, and it keeps dragging it down bit by bit. And the further we fall and the more sideways movement there is, the further it gets pulled down. And then when a reversal comes and we enter another bull market, for example, I'll have my increased amount of Bitcoins or Ethereums or whichever coin, which I can then sell at the top, all for profit. Let's move on to risk management with the setup. If I go in here now and say I want to open a new CoinM futures grid, let's take Bitcoin as an example now. Well, then I have the option here for futures spot. If you click up here, let me show you again, you'll come to this page and then there's the CoinM futures grid in a long version. And now I say for myself, okay, I think we might drop to around 40,000 US dollars, maybe even 35, but I'll definitely set my safety net much lower than where I actually expect the price to go. Of course, we can go even further down here. You absolutely must not forget that. And then, for example, I say I want the grid range to go up to, say, 130,000 US dollars. Then here I still have the option to get a suggestion. Of course, we do this as a long. Now, for example, it says here 382 grids that I can include here. And then comes the next question, when should I start the bot? Personally, I wouldn't start it now with Bitcoin. We could still fall further. We can also take a look at the weekly chart. Because right now, we don't know if we'll keep going up or if that's it already. If we drop below this last low again, that would be almost a confirmation of a bear market, or we really get a reversal here and move further up. Accordingly, for me, it's less risky if I enter at a lower point. And that's not something where I would say I need to stress myself right away with a bot that I have to get into. No, I want to start this at the lowest possible prices and then gradually build it up again. At the next step, of course, we put in the investment. Personally, I remove the reserve margin. I can add it manually, and I can also add it to a running bot. And now, for example, it says I have to invest at least 0.00558 Bitcoins. Now I'll enter 0.09 Bitcoin, which is the amount I want to invest. And I see that I would now have a liquidation price of $36,450. That means I would be liquidated even though I have a price range below that. And this brings us to the risk-off mode. Now I'll switch to a 2x leverage and take a look at it afterwards. Then it says at $31,000. Either I let it run as is, because I would then do it with double the amount, or maybe even with 3 times. And if I later add, for example, another 0.04 Bitcoins, my liquidation price automatically drops. And of course, it could happen that if we drop that low, I'll have to keep adding more, but then I can buy Bitcoins at a very low price and gradually lower my liquidation price. And that's something you need to keep in mind. This is just the first bot. But if I say, for example, we have a starting price of $70,000, that's where I want this bot to start. Then you can also see the updated liquidation price here, along with your current margin and any additional margin included. And accordingly, you really should take a very conservative approach here, because this is a long-term strategy. And if I now use an X leverage, which is completely sufficient because I want to hold them, after all, I don't want to lose my held Bitcoins, but rather secure them as best as possible, if that's possible, then I can do all of this with an X leverage. And you can see here, the liquidation price is now at $22,308. My opinion, this is my personal opinion, I don't think we'll go down that far. And if we do, you have the opportunity to buy Bitcoins at a very low price. For example, I could add double the margin and lower my liquidation price to $15,000. And that's why I say risk off. There's no point in using 5 times or 10 times leverage here, right? Of course it can work, but this is about a conservative strategy where I can sleep soundly and don't have any stress about being liquidated. Or we can remember the last big drop we had at the beginning of October, exactly this one, when an incredible amount was flushed out of the crypto market. And accordingly, you can also do this, for example, if I now show it with Ethereum. After that, I want to show you something else with altcoins to explain why I see a problem there. With Ethereum, for example, I say I want a price range of $1,000. Maybe we'll even go down there, I don't know, up to $4,000. That's certainly a possibility. Again, I'll just take the suggested range here. I'll remove the auto reserve and now put 1 into Ethereum. Then it tells me, okay, I'm now at $1,178, where liquidation would occur with a 3 times leverage. But I have a range of $1,000. So I go down, say, okay, I'll take 2 times leverage, and then I have a liquidation price of 1,014, which is fine for me. I can then say here, I'll add another 0.5 Ethereum later, and I'm already further below. And if we drop that low, I can buy Ethereum back very cheaply and also add 1 Ethereum. Or if I say, okay, I've already bought more during the bear market and I'm ready for the next bull market, I can put in 5 Ethereum and have a liquidation price of $361. The good thing is the Ethereum I bought cheaply, I can later sell at a higher price. And as soon as the whole vehicle is back in the green, meaning in profit, I can withdraw this margin at any time and don't have to keep it in this grid trading bot. And that's the big advantage. If you really do this conservatively and are long-term bullish and say, okay, I just want to use my held coins sensibly to increase them, and we don't know how far we'll fall, whether we'll keep falling or start rising again. We can't say that in advance. We can also look at the Ethereum area again and remove the crypto index here. No one knows how far we'll drop. No one knows if we're going to rise now. If we do start rising now and I don't have a grid trading bot open, that's fine. My Ethereum will just become more valuable. But if we get lower prices, for example, in this range, or if we look at the liquidations heat map for Ethereum, there's currently an incredible amount of liquidation at 2,500. That's interesting for me to open a new grid trading bot. My next grid trading bot, which I'll also set up, will be in the area around $2,000 because there are 100 billion in liquidations here that might get triggered, and I want to protect myself there. The next one, for example, is at $1,500 because there's also a huge amount of liquidation there. And accordingly, the further we fall, the more grid trading bots I can open, since I use them for the long term because I would hold my coins anyway until Ethereum rises again. Because if Ethereum were to go to 0, my Ethereum would be worthless anyway, and this way at least I have the chance to increase them. And of course, we mustn't forget that the more grids are added, as I showed earlier, the more the liquidation price drops as well. If I now say Like with this grid trading bot, if it stays open for 3, 4, or 5 months, it will gradually accumulate grid profits, and these will also lower my liquidation price. But the more is accumulated here, like I showed earlier, as in the previous example with the grid trading bot that has been running for 48 days and has already generated 12% profit, even though it's been in a loss the whole time, as you can see here. Then of course that's quite something, because that's 1.5 months that this has been open and it has already put aside 12% more of my investment. And now I calculate that over 4, 5, 6, 7 months, possibly even a year if we have a bear market where it can keep putting something aside, and then I can also ride the entire upswing back up afterwards. Then you can imagine how much potential grid profit and later trend P&L profits can be generated here. And as I mentioned earlier, I also received the trend P&L here in Ethereum, and accordingly, in my opinion, that's the game changer, being able to sell my invested Ethereum plus their profits at a market top. What does it look like if I want to close such a bot? I can then click on Stop the Bot here, and this window will appear, giving me the choice myself. Do I want to have everything paid out to me in Ethereum? That means all the Ethereum paid out, which ideally would mean the entire bot is in profit, would then be transferred to my account. Or I can say, no, we're at the top now and I want everything to be converted immediately back into US Tether. Then I also have the option to receive it in US Tether. You can see here I invested 1 Ethereum, of course, with my current loss. Because I have a bit of a loss, I would currently get less Ethereum back than I originally invested, since the overall bot is currently at a loss. But if I have profits everywhere here and have set aside Ethereum, then hopefully in the future, when the price rises again, there will be 1.5, 2, or maybe even 3 Ethereum here that I can withdraw. Or I say I'll just sell all the Ethereum directly into US Tether and want to have it secured in a stable currency. Now let's quickly go through altcoins and their risks. For example, why do I say that I wouldn't start this yet with something like Solana, XLP, or similar? Because we've seen what can happen with altcoins. Take Solana as an example here. We had a very low price. We went up 35,000%, but then we dropped by over 95% accordingly. And the same thing could happen to us again now. We don't know how far a sell-off could go, because with Solana, one possibility would be $86. But if we see a really strong bear market, we could find ourselves back down here again. And of course, that's not exactly an advantage if we say we could drop another 87% from the current point. Accordingly, altcoins like Solana, Link, XLP, or similar. I would really wait until we have the lowest possible prices before activating those, but also make sure to position myself really far down where my grid trading range is. And that's why it's probably better to focus on Bitcoin and Ethereum, where things are a bit more predictable since no one knows what will happen. Yes, be aware of this, it can go down and we could lose everything. But in this case, I personally want to hedge myself so much that even if the lowest prices actually occur, I can buy more at a bargain and put them into the bot in the worst case, so that my liquidation price is almost at zero. Because those coins are just sitting there. I bought them cheaply, and as soon as we enter a bull market again, I have the opportunity to take them out and sell them. And that's currently my strategy for making good use of my coins. And just very briefly in conclusion, it's not something where I would say I'm personally jumping straight into these grid trading bots right now. No, of course, I want to position myself as conservatively as possible, but also as perfectly as possible at low prices, and not necessarily say at 86,000 US dollars for Bitcoin, I'll open a grid trading bot and then we drop down to 39,000 US dollars, or maybe even lower if we enter a bear market. But rather, when I see that we have massive new drops at key levels, like this low here or this strong volume here, or also my Fibonacci strategy, as I always use it, and I see that we have the 0.5, the 0.618, or the 0.786. For me, that's more the scenario where I get in, because I want to enter with risk off at the lowest possible price in order to benefit as much as possible, and not just out of greed say, hey, I like this, I'll jump in right away and open it, because you have to keep in mind, we could easily fall much lower here. And again, I'm definitely not using an all-in strategy here, but rather I'm doing this with 20 to a maximum of 30% of the coins I currently hold, and I'll gradually put these in at lower prices. I hope you enjoyed the video. Feel free to subscribe to my channel. Let's hit the next 1,000 subscribers here, and of course, check out my other videos as well. I have a DCA strategy here that I've been using for over 2 years now, where I generate passive income on Bitget. An incredibly good strategy, but also the Trading Learner step-by-step to becoming a pro trader will probably help you a lot when it comes to doing proper chart analysis and catching sniper entries in trading. Thanks to the Fibonacci strategy, liquidation levels, and much more. We'll see each other again next time. Feel free to leave some feedback on what you think about it, and until then, I'll say bye-bye.